I have Russ Gerson with me right now from Gerson Group. In 2008, Business Week named him one of the most influential headhunters in the world, and so he sees this happening. We're seeing Credit Suisse cut jobs, Goldman Sachs, Bank of America, overseas HSBC, Lloyd's. I mean, is there a new wave of financial layoffs ahead of us?
Well, first of all, these layoffs that take place during the summer are typical on Wall Street. There's always a culling. This year, the culling is much more aggressive than it has been historically, partially because of Dodd-Frank, partially because of Basel, but the profitability that's existed on Wall Street over, the most recent history, even pre and post-crisis, is causing the banks to be a little bit more aggressive on their layoffs.
You talk about Dodd-Frank, and it is, just to remind everybody of the Volcker Rule, right? Proprietary trading at banks, internal private equity funds. These are the things they had to cut. So we're seeing those guys get cut from financial firms, right?
Yeah, the proprietary trading that the Volcker Rule has basically made it so the institutions really can't participate anymore has been a big contributing factor to profitability at these institutions. That profitability, those margins are gone, and that profitability supported a lot of other businesses that they're going to have to be much more aggressive.
So last time I was talking to you, we were doing a story about how 70% of guys on the street were getting looks from other firms. I think 40% thought that they would make a jump within a year, which was kind of an amazing story. What do you do when a guy calls you up and says, either I'm getting cut or I'm leaving, I've been trading here for 10 years, I've been trading here for 15 years, where does he go? What do you try to put him?
The opportunities on the street just aren't going to be there this year. There aren't going to be that many places for them to go to. So if somebody gets let go, they're going to have to think about other alternatives outside of the street, possibly retiring if they've accumulated enough. But the opportunities that have existed historically at other institutions for them are not going to be there this year.
I mean, Russ, things are changing a lot, that's for sure. Talk to me about compensation packages. They used to be huge, big. They entice people to jump from firm to firm to firm. How's that changing?
Well, again, the opportunities are not going to be there, so the big compensation packages aren't going to be there. Additionally, the institutions have moved more from just cash to a very large portion of compensation being in deferred cash and equity. But more importantly, institutions with the kind of profitability being down aren't going to be able to afford to pay the kinds of big packages that they have paid historically, even if they want to hire people.
All right, Russ, thanks so much for joining us. Russ Gerson runs the Gerson Group. Not the most positive message that we've heard, but it's really the stark reality of what we see going on Wall Street right now.